Enphase Energy has many attributes of a dream investment. You're talking about hyper growth, strong profit margins, significant free cash flow, relatively clean balance sheet, and strong secular tailwinds. And the stock has done incredibly well over the last 5 years, up something like 100x, 100 bagger. And so investors are wondering, one, what does Enphase do? And what does the prospects for the company look like in the years ahead? If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Enphase Energy, ENPH being the ticker. So management strategy is to build a best-in-class home energy systems. So what does this mean? At this point, it means their business is predominantly about selling microinverters and batteries tied to residential and commercial solar usage. So what's their value proposition? In order to understand their value prop, you need to understand a little about solar panels. Most solar panels are wired together and connect to a string inverter, which converts the energy from direct current to alternating current from several panels. So you have several panels connecting to one effective central hub, this string inverter. In contrast, microinverters, what ENPH sells, connect to individual solar panels. While this is much more costly than a centralized string approach, it can result in much better throughput. For example, an entire string's output is limited by the output of the lowest performing module with a string approach. So you can have one that's partially shaded and it impacts the throughput that you get through all the other panels. So microinverters can increase the output for a solar project. Whereas when you're looking at a centralized string approach, it creates a single point of risk failure, and it's also more difficult to diagnose and can go unnoticed. The string inverter approach, while cheaper and more common, also makes it more challenging for installers. Think longer install time as you work around potential shade complexity, because once again, you have that single point of failure with the lowest, it's limited by the output of the lowest performing module. So you need to work around that. As well as there's safety constraints, as you have a lot of energy, 600 to 1000 volts going through one wire. So you do have, with Enphase's microinverters, it's typically installed underneath each solar panel and is generally viewed as easier and safer. Enphase is the leading producer of semiconductor-based microinverters, which they view as having an unrivaled position to convert energy at the individual solar panel level while providing advanced monitoring and control to track how much is each panel contributing. Since new management joined in 2017, I'm going to probably butcher his name, but Badri Kothandaraman, he's the CEO. He joined in April 2017. They started selling the IQ7 microinverters. Since that time frame, when they started, Enphase's fortunes dramatically improved. Sales are up by more than 5x, and they've swung from huge losses to significant profitability. This swing from significant losses to profitability is a key driver of why the stock is up 100x over the last 5 years. Enphase Energy is clearly taking share with their microinverters and battery technology. The market isn't growing as fast as they are. That's what I mean. So you see 78% revenue growth in 2021, which suggests a very strong or potentially unrivaled value proposition with their microinverters. That said, what's unclear to me is why their microinverters will continue to win and take share in the future. I'd love to have your thought your thoughts. Leave it in the comment below if you think Enphase for sure will be a winner, in the years ahead. It's something that I'm exploring. Is it by developing better tech? For example, their IQ8 microinverter can operate off-grid, so if the power goes down, the microinverters can still power a home even without a battery. Or perhaps they will win by relentlessly focusing on the customer experience. For example, higher return on investment through smart energy management, longer life warranties, and higher customer satisfaction scores. Or perhaps they will win by continuing to enable installers by making it easier to design and finance and sell new solar projects. Keep in mind, this is just where the company is today, microinverters and batteries. They're also moving into EV charging technology. They recently acquired a company called Clipper Creek, as well as looking at small commercial solar systems and portable energy. Clearly, they have a monster runway in front of them, looking at lots of hypergrowth potentially. The company has a lot of what I love in a dream investment. You're looking at history of strong execution, strong free cash flow, hypergrowth and an unlevered balance sheet and strong secular tailwind. So I like what I see. The question is, what about the valuation? First, a quick plug, where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord. You can sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. Once again, that's at unrivaledinvesting.com, click join the journey. And if you enjoy videos like this, please make a point of hitting that thumbs up, hit that subscribe button. So while I like the potential of Enphase increasing their share of wallet per home over time, i.e. not only selling microinverters, but then batteries to EV chargers and then grid services, the reality remains that most of their revenue comes from one-time transactions, i.e. most homeowners don't and shouldn't need to buy again and again and again. This is not a recurring revenue business. This means it should have lower multiples than, let's say, companies with a higher degree of recurring revenue. Enphase is guiding to continued hypergrowth in 2022, at least for the first quarter, where they're guiding to 40% plus growth in the first quarter. But management also acknowledged that they're possibly over-earning as well, talking about 24% adjusted margins versus their baseline financial model of 20%. So that is something investors should consider. Even if Enphase continues to execute, it'll be tough for investors to have an incredibly compelling return in the years ahead if there's any form of multiple contraction. That is one of my chief concerns here, because if the valuation multiple, let's say, contracts from 16 times sales to, let's say, something closer to 5 to 10 times over time, it does make it tougher to have a great return, maybe even less than 5 times. So Enphase bulls need to believe a few things in order to get, let's say, more than 70% upside over the next few years. You need, let's say, 35% plus annualized growth, or low 20s operating margins versus around 16% today. That 16%, excludes stock-based compensation when it doesn't add that back. The 24% I mentioned a minute ago did add it back. Or more, you might just need a higher end multiple where you assume no multiple contraction. As I look at all this, this is tough for me to say, yeah, you're going to generate a really attractive return. Maybe management can pull it off. Now, keep in mind, this is just a hypothetical valuation framework where, of course, the stock price can go way higher or lower, as I'm just trying to pencil out what Enphase stock can do if management executes. Will they continue to deliver? I'd absolutely love to hear your thoughts. I'm very impressed by the tone of management, how they've executed so far, how the stock has done incredibly well. I'm just less confident that in the next few years it should perform as well as it has over the last 5 years. Truly, they're executing and delivering really interesting products, though. So I look forward to continuing to watch them in the years ahead. Would love to hear your comments, so please make a point of leaving a comment below. Hit that thumbs up, hit that subscribe button. Thanks so much for tuning in.